Welcome back to the Comstock channel. My name is Breann Hendrickson, and today I have Joe Camp with us to talk about the USDA report that came out today. And as you noticed, Joe, you kind of already talked beforehand. My backdrop is a little different. It's not the cornfield as normal. I'm currently in Louisville, Kentucky at the North American International Livestock Expo, so a little different than the commodities that we talk about most days. So kind of throwing a little change around here, but that's not the discussion we need to talk about. It's the report that came out today, and don't look at your screen either. So
Right, yeah, your backdrop's good. Mine not so much here with this screen. This is one of those days where I got to throw a sheet over it. There's at least some sun shining, a glare on the screen, but that's about all that's going right for today. Is some clear weather, and that's left farmers, maybe more optimistic here than otherwise this report would have cause for. And it is a bearish crop report any way you look at it. It starts with these yield estimates. If you look at the graphic we're going to show for a recap on the U.S. crop production numbers, we had both corn and soybean yield averages coming in higher than expected. For corn, much higher than anticipated, up 1.5 bushels, now above a year ago. We add this higher yield to these elevated acres that we had this year, and actually coming up with a record high crop production total this year of 15.2 billion bushels of corn. So we produced a lot of it. That's usually a bearish thing for the market. The reaction is negative here today. Same for soybeans, with the yield coming up 0.3 of a bushel to 49.9 bushels per acre. And that now being like corn above a year ago. I mean, maybe still hard to reconcile for me how this crop as a whole could be above a year ago. I know there's a lot of places, particularly in the West, where there's been at least some drought relief here over the last year, have done better. But we were coming off of last year having a lot of state-by-state records, and so we got to think about these genetics and holding up well, and I guess lean towards what we've heard from the field, which is fortunately that these crops did come in a lot better than expected. I still think, the term is better than feared for most, but, we trade with what we're given, and we were given a negative set of yield estimates today for sure. You look at some of the revisions state by state. I think there were 17 total states with a higher corn yield estimate. It included Illinois, Iowa, South Dakota, Minnesota, Wisconsin, Indiana, Missouri. I mean, a lot of states here improving at least over last month's estimates. You look at the soybeans, similar story. Quite a bit of states had their numbers revised higher. The next thing I want to talk about, though, would be the silver lining, and maybe why. I'll check to make sure. We've still got a little bit of session left to go, but selling has been what I'd say is, kept in check in part because of what we'll see on this U.S. ending stocks graph. And it shows that the carryout numbers did not, while they were higher than expected, they did not come in outside of the top end of the trade ranges. They weren't way too high relative to pre-report estimates, and that's a good thing. And in part because for corn, we had the USDA revise the demand estimates higher, both ethanol and exports, and also the feed and residual coming in higher. And so that carryout estimate not swelling by as much as it could have given the yield change. And similar story, maybe even, definitely much more bullish on soybeans, because even though you have the carryout revised higher to 245 million bushels, that's still historically tight any way you look at it. And so from here, if we have improvement for demand, which we can talk about, is still something we think is in the cards, we're at risk of tightening that up further in a way that price has to ration these bushels from this latest crop. So negative reaction. We'll see about the follow through here for the rest of the session and into the weekend.
So let's kind of switch and let's talk about South America. Let's kind of talk about what those charts are looking like, but also everything else. I feel like they're not also having good luck either.
Right, yeah, and that's something we should recap today for the report as well. There's one more graphic that we put together at Comstock for the world supply numbers, and you have a few points of bullishness in that the Chinese demand is still expected to be strong this year. And that can be something we get more of considering the crop production worries that we have elsewhere around the world, particularly right now, South America, but also up in Europe, France. We're talking about that with the wheat crop. Australia, we've talked about that a lot with the wheat crop and El Nino cutting their production by at least a third this year. That was something that is kind of bearish on today's report. Those global ending stocks numbers not maybe coming down as much as they could or will. And that would be something that may follow further cuts in the estimates for crops starting in Brazil and Argentina. Of course, huge players there. And that's kind of frustrating here in part from this report that you didn't have any lowered revisions for Brazil and Argentina. And I know it's early in the season, but when you look at the delay for plantings there, and when you look at other estimates from anybody else, including those from within Brazil and Argentina, they're already making downward revisions, and so we're conservative on the USDA end, and that is something that mixes into a bearish crop report reaction today too. But it's something as well that can flip into more of a positive. Unfortunately, if growers down in South America are going to continue to suffer from adverse conditions here, weather-wise, we're going to expect that we could have more demand to follow from that. And we got a little taste of that today, something that we could see more of, which are these big daily export sales numbers, more than 1 million tons in one sale and another 650 plus thousand tons in a separate contract, all reported today for soybeans sold to China. And so that's a positive maybe we could find for the market going forward.
So as we wrap up, my famous question to you, how do you feel about the report that came out today? I know that it wasn't pretty, but was there anything that you were like, okay, this is hopeful, or was it all not good?
Yeah, no, there are some hopeful parts of it. Again, that price action wise, I mean, simply that we're not going any lower, at least for now, and we'll test this on Friday and to start next week as well. But we got down to that real key low and dropped under it a bit for corn futures, yet selling did not snowball despite a really negative yield number. And there were those positive revisions on the demand side that have us hopeful for usage here ahead. And then simply back to the fact that we know we'll get past this crop report now. We won't have any supply side changes likely in next month's report. And for that reason, it's a lot of attention that's shifting towards this demand storyline and back to what's going on, which is friendly right now for South American weather. And, that is one other graphic that I prepared for today is South American precipitation, the shortfall that you can see in red for Brazil across most of that country, including the really key production regions in Mato Grosso. And so that's just the last 30 days, what they don't have until this point. And if you look at the forecast for at least the next 2 weeks, it's painted really similarly in that they have almost zero chance for a material rain event. And that's going to further disrupt soybean plantings. And eventually it's going to become a big deal for that second crop of corn that they want to follow this first soybean crop. And so that's going to come into play again when we talk about U.S. export potential. One final graphic that I like to show is just where we're at in terms of export sales year to date. And I'm going to include soybeans here on this week's update and show you that while we're behind where we were a year ago and while we're behind the 5-year average, all of a sudden with these sales like we got this morning and with the potential for a shortfall in Brazil or Argentina this season, there's plenty of room for that line to start tracking higher. And exactly what we learned today with the carryout estimate being as tight as it is, there's not much room for exports to go up from here. Prices have gone higher in terms of having to ration bean demand away from a really hot processing sector. So it's still the case that if we were even to catch up and export as much soybeans as a year ago, all other things constant, our carryout would be negative. And so that's the bullish silver lining here, and a negative Thursday crop report.
All right, that'll do it for this episode. Thanks so much.
Want more premium content? Subscribe to the Comstock Report, where you will receive 2 reports daily. Want more video content? We are on Facebook, YouTube, and now TikTok. So don't forget to like, follow, and subscribe.